Hey everyone, good afternoon. I hope you are having a nice, very nice weekend so far. I wanted to come on and do a quick market review, show you what to expect for next week. I also wanted to go over some swing ideas to watch for next week as well. I'll be playing three of these ideas tomorrow. I already picked out the three that I'll be playing, and they'll be sent out in tomorrow's newsletter. But for now, let's go ahead and take a look at the market. When I look at the market, I there are a few things that I look at every weekend and most days, I would say, in the pre-market. And they are, I have them on a watch list right here. So let me just go ahead and copy and paste. They're the Qs, which is the tracking ETF for the NASDAQ 100, dominated mainly by high-tech stocks. I like the Qs the most because technology companies for sure lead the economy. So I like the Qs. The SPY is more representative of the whole economy, and obviously it's the tracking ETF for the S&P 500. The IWM, don't use it as much, or I think it's not as useful, but obviously it's the Russell 2000, dominated by small, it's all small cap stocks. XLF, the financials, the tracking ETF for the financial sector. Notice the last week or so, last 7 days, it's been coming in hard. We'll review each and every one of these in a minute. The SMH is the semiconductors industry, and Apple is, I treat it like its own sector. Apple, I think, makes up about 12.5% of the Qs. Obviously, the largest company by market cap in the entire country, and the most important by far. Followed closely by Amazon now, and of course, the rest of the FANG, the Google, uh, Facebook, and Netflix have fallen off a little bit. But those are the things I don't necessarily look at Amazon every day, but those are the things that I look at every single morning and especially every single weekend. And I look at them in detail. Now, if we look at the Qs, this is bullish, obviously. If you zoom out, look at the daily chart, that's bullish. But we're also not only interested in the long-term trend, we're also interested in the short-term, the most recent trend. And at the moment, we're basing bullishly. Moving average is flat to even slightly pointing down. So if we can just base one or two more days here, then that moving average will start to point up. That's the 20 period moving average, by the way. Um, will start to point up and then we'll get a breakout, okay? But if we break under the lows, that's the line in the sand for me for tomorrow. If we break under the lows, then I'd expect to get one, maybe two red bars. I doubt that would get two red bars. At the moment, we're just in an all-out base, month-long base, basically. So it's just really choppy. The SPY, which has been stronger than the Qs, except for the last couple of days, because of the financials. The SPY is definitely dominated by financials. Notice all the global banks are three or three letters or less. So and anytime you have if the symbol is four or more letters, that means it's a Nasdaq stock. Okay, three or less, that's a listed stock. So banks, BAC, that's Bank of America, Wells Fargo, WFC, Citibank is letter C. The fourth one would be JPM, right? JP Morgan. So they're all on part of the SPY, and if and if you look at the financials, they've been really coming in, and that's what affected the SPY. But no doubt, the last couple months, SPY has been leading in a nice big uptrend. Now the SPY again has been weak a little bit, but has a daily buy setup. It hasn't triggered yet. We would need to take out at least this bar's high. To tell you the truth, we really need to take out, let me bring out my crosshair tool. We would need to take out 292.25 on the SPY for us to go back up, okay? The IWM has been pulling back, so that's a little more bearish, of course, has a little more room, but if you look at the weekly chart, we're already at the rising 20 and at minor support, so doesn't really have that much room. Okay, and bullish on the weekly, neutral to slightly bearish on the daily. The financials bearish on the daily, but I don't think that's too bearish, because if you look at the monthly, we have a monthly buy setup underway. So usually the daily will give way to the weekly and the monthly. And the monthly is bullish. Let's check the weekly. Weekly is a little bearish. So the financials are going to have to do some consolidation for a while, probably, before they're ready to go back up. Sami's been on its own page, almost very weak the last few months on the daily chart, but we can't call that very weak. Look at the monthly chart. So it's been actually rather bullish. We do have a breakout failure on the semis. Again, it's good to be aware of how the whole market looks. It gives you just kind of a deeper sense for the market, a deeper understanding, so to speak. But the truth is, no doubt, the signal is mixed at the moment. We don't have an all-out bullish or an all-out bearish market at all. And that's why, one has to keep that in mind and adjust your expectations accordingly, right? One has to adjust their expectations accordingly, not to expect home runs. From last week, just the plays that closed Friday, we had the HTGM trail out. This was a very nice buy setup. I still like the HTGM long as a long-term play. Let me show you the monthly chart, but let me adjust the scaling for a second. Actually, the scaling is good. Look at the monthly. That looks good. That looks nice. So I would like to get back in it. This was entered right here, long, took half, no, I took half here, and then the back half trailed out right there. So nice trade. Again, entered here, half at 477, I believe, right here, and then half trailed out to 5 something. And then the other one that trailed out yesterday or Friday was the Pac B. No, it trailed out on Thursday. It reached target. It reached target. What a beautiful buy setup, and then went totally climo. So that was a nice trade, very nice trade. And that was it, I believe. Have a few open positions still, but those are kind of the two trades that trailed out last. Okay. Uh, Watching the following for tomorrow. AJG. This is like the Pac B. The Pac B is a lot more powerful. Let me show you the Pac B. Here it is. Daily pullback to the rising 20. What is this? Daily pullback to the rising 20. Doesn't have as much support. The pullback is pretty deep. We have to evaluate the also depth of the pullback from the last rally, from the start of the last rally. And as you can see, that's about 80%. Otherwise, this is very clean. And over here, long, stop right there, target right here. Can you keep it beyond that? Sure, but as a swing trade, that's the target, okay? When a stock comes from a prior pivot high, the prior pivot high is the target, okay? Now, can you, again, keep it beyond? Sure, but that's usually the target. So I like that. ALGN is basing bullishly. Tell you the truth, I played the stock short 2-3 times, and both times I had a lot of money in the play, and I didn't take it. The one time where it kind of hurt was at the end of last year, because I had a really nice play. I played it in both my day trading account and the swing account short. Here it is, the breakdown. It's coming. Here it is. Look at that. Sweet. My target down a little bit. It had reached target 1, but I adjusted it down just a little more, and it never reached it. So I had to kill it on the way back up. But this was first time. The second time was more recently, like a few months ago. It had a rollover, and it dropped $30+. This time I didn't give it all back like I did last year, and I trailed it here. But I was really hoping for a bigger move because of the climactic run-up at the time. Here and in there. Those are the two times that I traded it. Now, as you can see, both times it failed, went back up, and is looking bullish. So it looks higher. I like it as a breakout over the all-time highs, 398 something, 399 with a stop under the base. LIQDT is a daily buy setup. Remember the AJG? I don't need to go over this again. It's exactly the same. Lily is a breakout. looks bullish as they come. What I don't like about it is it feels like there's a few bars in a row. I mean, I know it's not in a row because we have the narrow range bar there, but a few green bars in a row almost to the entry, but over the base, stop under it. MDXG is kind of a daily pullback. It's more of an hourly base breakout. So that's what I like about it. It's an hourly base breakout, stop under the base. Um, the PCRX is one of my favorite long-term watches, and not necessarily one of my favorite daily watches or swing watches, but that's a nice hourly chart. I mean, I'm sorry, that's a nice monthly chart. I'm in the HOS, it's the same idea. This is a little tighter, of course, but it's the same idea as the PCRX. This is called a transition A on the monthly chart. Okay, PCRX, HOS, I'm in the FEYE also. It's a transition A on the monthly. WDR, transition A on the monthly. Now the HOS actually last week, I don't like it when the play triggers and starts to go Climo. See this? Well, I'm in it. So every single day, except for this day, I guess, it's been making money and it's been really, really nice. But I would rather get a slower move up because when they move up fast, they also crash hard. So, and it will be hard to hold. So I usually prefer a run up, a base, a run up, pull back, a run up, right? Something like this, more than just a unidirectional run up. But hey, it's making money, so no complaints. The PCRX is the same kind of idea. It's a long-term watch, long over the base, stop under. A PDCO is a daily buy setup. Notice how the gap down got bought. It is it's a very strong indication of what's yet to come when a bearish gap down. This stock gapped right under support when a gap down gets bought like this. And I think the SYMC is the same. See this? I played it as an earnings play, short this day, gapped down nicely, covered it, but look what ended up happening. Got bought on big volume, and that's indicative of what's to come. So we can see the SYMC rallied, PDCO after that gap down rallied, and they both have decent daily buy setups. So PDCO is a daily pullback to the rising 20, and the SYMC is a pullback, didn't quite reach the 20, but nicer hourly chart. I'm not showing you, I guess, the hourly chart very much in this video. Over the base, stop under it. So those two are also daily buy setups. Another daily buy setup, not very good when you come from a rounding top, because rounding tops create more supply there is in rounding tops than in V tops. But what I like about the TERP is it looks higher on the larger time frames also. This is a what do you call it? I think an energy company in the like wind power, windmill energy company. So I like it higher as a long-term play. Some couple of climb watches, RYAM, little climactic. Let's take a look at the weekly. Weekly is a little damaged. Monthly is still okay. I played it last year on this monthly buy setup. It was gorgeous. It was a daily breakout just over the 200. See it? So this was really, really nice. And then it trailed out. It just trailed out at the beginning of the year. So now it's kind of a climb watch for tomorrow, and the same with the SPG. Multi-bar drop, biggest bar, biggest volume to the 200. I like them both as climactic watches. Some short ideas, CMD, gapped under a 2-3 month base, and it has a 1-2-3 short. And what I don't love about it is the monthly chart. This is a very, very bullish monthly, but we can say it did go a little climactic and maybe comes down to 80, which is where support is at, $80. So it's a 1-2-3 KRP gap down and sort of a 1-2-3 also. I like the previous one more. NWL is a breakdown. The hourly chart I think is pretty nice. Under the base, stop above. This stock is just in real serious trouble. And I know some of you might think, well, it dropped already from 55 to 20. Is this the time to short it? It's always the right time to short if the stock looks lower still and it's above $0, right? It can always drop more. It could drop to 15 next. Yeah, does that make sense? NXEO is is more of a climactic watch. I don't love it. I don't think this is going to trigger, but you have the run up, you have the attempt to go higher, and if this fails, then it'll be a good short. So you see yesterday's bar, Friday's bar was a green bar. So if we negate it, then it'll be kind of a double top or a retest and failure. Short, stop right here. And target could be all the way down to here. Okay, so it has good R to R. And then the last one is the WTR. Looks lower just off the 20 MA on the daily chart. So this is kind of a sell setup slash breakdown. So this looks lower. I have other watches always, but these are some of the ones that I'm going to be watching closely at the beginning of the week. So Monday, Tuesday, does that make sense? But I scan every day and I create a daily watch list on a daily basis every day. But these are some things to consider and look at for at least the start of the week. There are some plays that I'm in that I haven't yet gotten going that if you want to, consider, like the ELF. It's a weekly sell setup. I'm in it already, but still not really too late at all. Anything else that I recall that's not too late? BCRX, a little late now. MIK is probably too late. BZH is definitely, yeah, most of them are too late. BZH, I'm in short. Looks great, but I would say that's too late to get in. So, okay, so we'll just stick with these. Again, especially for the first part of the week. And if you're in the Strategic Swing Trader program, I'll be sending out the alert tomorrow around 8:45 a.m. with the plays that I picked. I already picked them actually. There'll be 3 plays. All right, guys, I hope you enjoyed today's video. I'll talk to you sometime during the week, I hope. Have a great rest of the weekend and enjoy the rest of the weekend and have a good week. Take care, everybody.